Shares of Academy Sports and Outdoors bucking that trend, climbing 12% after beating on second quarter earnings and raising its guidance for the year. Joining me now with a smile on his face to talk about those results is CEO Steve Lawrence. There he is. He's a happy man. Why shouldn't he be? Nice numbers for you. Congratulations. How'd you do it?
Well, you know, it was a challenging quarter from a top-line perspective. I think that's pretty well documented. I think what we got rewarded for today was being able to hold on to the margins. We actually beat our margin from last year by about 30 basis points. And
How'd you do that?
I would chalk it up to inventory control. One of the disciplines the team's really put in place is strong inventory disciplines. And I think you know this about retail. If you let your inventory get out of control, it translates into markdowns and inefficiencies in your store's supply chain, and we didn't let that happen.
So inventory control is one part of it, and one part of inventory control is controlling shrink. Where's that with you guys?
You know, shrink's up. I think that's a very well-publicized trend that's out there. I mean, the organized consumer crime out there is definitely a real deal for the industry. That being said, it's kind of insidious, right? It hits you a couple of different ways. It hits you in terms of the write-off you take when you lose the inventory. It hits you in terms of trying to protect the assets. You miss some sales, right, because you don't own goods that you think you own. So we've been really thoughtful about taking continuous inventories, updating our counts, making sure we have the inventory there and protecting our assets. And I think that helped us. Our shrink was still up about 30 basis points versus last year, but much better than where we were in Q1, where it was up 70 basis points.
I don't want to spend a whole bunch of time on shrink because I've talked about it too doggone much for my taste. But at any rate, tell me shrink includes a lot of different things. It can be damaged merchandise. It can be missing merchandise. It can be stolen merchandise. For you, what percentage is which there? How much is theft? How much do you estimate is damage? How much do you estimate is accounting or just sort of loss?
Yeah, typical belief is it's about a third. We worked hard on the buckets. It's a really good point because it doesn't all come from one place. So some of it's internal theft, some of it's external theft. So put in place controls around that as much as we can. You know, putting high shrink merchandise in very visible locations so that there's always somebody around tagging goods, you know, but at the same time, not trying to hurt the customer shopping experience. You know, we don't want our stores to become museums. We want customers to be able to interact with the product. Some of it's paper. We've definitely put better controls in place there. And then the defective piece of it, you're right, it's a big deal. So we're being smarter about how we look at the merchandise that's returned and make sure that it's not something that was cosmetic in nature that we can fix and maybe sell. So it's been a multi effort across multiple fronts.
A couple of more quick questions. We just showed a map of where your geographical footprint is. It is mostly in the Southeast and South, Mid-South. Why not expand geographically? And can we expect that?
We definitely are. So we just did a long-range plan that we announced this street a couple months ago. We're in 18 states today, 270 stores. Our goal over the next 5 years is to open up about 120 to 140 stores. And ultimately, we want to be nationwide. We think that there's a lot. We have a great model. Customers love us. We have high customer affinity, and we expect that that's something that's scalable and transportable. And we're looking forward to bringing Academy to more people across the United States.
You began your comment on second quarter earnings by saying, as we continue to move through a challenging economic environment. What's challenging about it? It feels like the economic environment's pretty doggone good and that the consumer is spending pretty robustly. What's the challenge?
I think the consumer's under pressure. I mean, I think inflation is real. I think household credit card debt's up. So I think that's making them a little more judicious when they spend. That being said, we have seen them shop. They'll shop during those kind of key moments in the calendar, like a Mother's Day or a Father's Day or back to school. And then they kind of retreat in the lulls in between. And so we've seen that behavior kind of play out over the last 12 months. And so we've planned and are working around that and making sure that when they do decide to shop, we've got great products at great prices.
Yeah, the hot stuff really goes, doesn't it? My son has been trying to find this certain type of Nike football cleat. He just can't find it anywhere. Maybe I'll have him go on academy.com and find it there, or a baseball bat. They can't seem to find it. Let's talk just very quickly about your deal with Fanatics. What does that hold for you in terms of revenue enhancement?
Yeah, we haven't disclosed a public estimate on what we think that's worth yet. But if you think about it being in 18 states, you know, we do a big licensed team business, and it tends to be centered on the categories and you know, teams that are in our local market. So, you know, I grew up in Minnesota. I'm a Vikings fan for football, and we don't currently sell Vikings product on our site. So this is really opening up a lot of teams and leagues to kind of that displaced fan in our marketplace. And we think that's going to be a big win for us down the road.
All right. Thanks very much, Steve Lawrence. We appreciate your time today.
Thank you. Appreciate it.
Keep wearing that smile. We appreciate it.